Hello, everybody. Thank you for joining us for this Discovery panel session about scale-ups, how Ontario entrepreneurs are scaling up and attracting international attention. It's a new generation of Ontario entrepreneurs out there, scaling up, securing big investments, making a splash on the international stage. My name is Bob Sivak. I'm the Senior Vice President of Business Development Commercialization at OCE, and I welcome you to this panel session. For those of you active on social media, I'd like to remind you that if you're tweeting any comments, whether it's about the session or about the host, please use the hashtag OCE Discovery. That was easy. So it's my pleasure to introduce our moderator for this session, Bilal Khan. He's the Managing Director of OneEleven. OneEleven is a post-seed technology accelerator focused on helping Canada's most promising high-growth startups commercialize technologies and scale their operations. OneEleven, for those of you, hopefully you've all heard of OneEleven, it's one of the Canada's most premier incubators of its kind. The unique partnership between industry, venture capital, government, academia, objective of making Canada a global leader. So without further ado, I'd like to bring up Bilal. Bilal.
Great. Thank you, Bob. I appreciate the introduction. We've got an incredible session here for everybody here. Canada's got this incredible startup ecosystem, and it's evolved over the last couple of years. And we're seeing more of those companies now thinking really hard about how do you scale a business. And I think it's important to understand that, going from 0 to 1, the ideation stage, helping a company kind of come up with an idea, get your first product in place, get your first customer in place, is a fundamentally different challenge than having to scale that business and really think about how do you take that company from 1 to 100. How do you bring on customers? How do you attract the talent that you need to bring on? How do you raise the large rounds of capital that it'll take to help scale that company? Today, we are fortunate enough to have the best tech entrepreneurs building companies that are literally in scale-up mode. These are entrepreneurs, many of them repeat, some first, who are thinking every single day about the challenges involved with scaling a company, with growing it. And today we're going to be able to kind of dive a little bit deeper to discuss what works, what doesn't, what's been some of the challenges of scaling a company in Ontario, any regrets, any opportunities going forward. And so we'll really kind of get into this conversation and be able to dive a little bit deeper. We'll then open this conversation up to the audience to be able to ask questions along the way. So needless to say, let's kick this panel off. So what I'm going to do is I'm actually going to hand it off to the panel very, very briefly to introduce yourselves and your companies, and also talk a little bit about how that company got started and when. Mike, if we can kick this off with you.
Sure. My name is Mike Silagadze. I'm the founder and CEO. Sorry, can you guys hear me okay? Yeah. I'm the founder and CEO of Top Hat. We're an education technology startup in Toronto. And what we do is we provide a teaching platform that professors and universities use to replace their traditional paper-based textbooks with digital interactive alternatives to provide their online homework for their students and engage them inside the classroom. That ultimately improves student outcomes, their grades, and saves them a lot of money on their textbooks. So we got started about almost 8 years ago now, which seems like an eternity, around the University of Waterloo, mainly based on my experience at the university, where I found that the lecture environment was really dull and not very engaging, and textbooks were expensive, and just the whole educational experience seemed like it was stuck, in the last century, maybe 2 centuries ago, where you could bring someone back, from 100 years earlier into a classroom today, and they'd feel right at home. I mean, this one of the few experiences that people go through that hasn't changed in any substantial way for that long. With the advent of smartphones, that presented an opportunity to transform that experience, make it much more interactive and engaging, and improve student outcomes. And today we've got users at pretty much every large university in North America. We're growing really quickly. We've got about 250 people now on board, and looking to double that over the next year or two.
It's incredible. Thank you. Great. Carol?
My name is Carol Leaman. I'm the CEO of a tech company called Axonify in Waterloo, based in Waterloo. And Axonify is an employee knowledge platform. We deliver a 3-minute-a-day experience to corporate employees that conveys core information using a unique combination of brain concepts, brain science concepts, gamification, and adaptive learning that changes behavior in ways the companies need them to perform, and we measure the business outcomes associated with that. And the company was founded about 5 years ago. I actually bought the technology from the original founders who had accidentally conceived of the idea. They were 70 years old and were marketing professionals and did this to save a customer they were going to lose. And one of the things I do a lot is mentor early stage entrepreneurs in my spare time. I was running my last company, they approached me, and during the phase that I was helping them, Google came to buy the last company, so I sold it and then bought this technology and picked up the one customer, 2 of their employees, and started over from scratch. So that was 5 years ago.
Great, thanks, Carol. Ali?
Hi, everyone. So my name is Ali Asaria. From a career perspective, I studied at the University of Waterloo. I studied computer engineering. And after working at RIM for a little while, Research in Motion BlackBerry, I started a company called Well.ca in Canada. It was just me packing boxes at my dad's pharmacy in the beginning, but we grew it to a rather large company. It's one of the bigger e-commerce companies in Canada. And then about 3 years ago, I decided I wanted to build a purely tech company, because Well.ca was both e-commerce and technology. And so Tulip, my current company, was really me saying, what's the next big thing that I can work on, especially knowing so much about retail and technology from my Well.ca experience. The story behind Tulip really is we have this vision that every worker in the future is going to have a mobile device in their hands as part of their job. And so we're working mainly with retailers right now, where they want to give all of their store associates an iPad or an iPod Touch, and we build the applications for those.
That's incredible. Great, thanks, Ali. I think it's fair to say that we have 3 of the fastest growing tech companies and tech founders on the panel today, and so there's a lot to learn about what it takes to get to this stage and how do they take it to the next level. There's kind of 3 big buckets that I really want to focus on here as it relates to scaling a business in Ontario. One is the capital needs of a company at your stage and how an entrepreneur thinks about attracting that capital and tapping into that. The second is, of course, the talent challenge. How do we get the talent? Your companies are growing so fast. I mean, the fascinating thing about a technology-backed, venture-backed, fast-growing tech company is how quickly it grows, and so how do you attract the capital to that? And the third is around customers and revenue, and really thinking about, Canada's a small economy. As you grow and to keep up with the pace of growth that you need, how do you kind of attract, how do you kind of enter new markets, certainly down to the south, but around the world as well? So let's start with the first thing. Mike, you recently raised by Union Square Ventures, which is one of the largest funds based out of New York in the US. Talk a little bit about how challenging that was and why you decided to go down south. Were there capital pools available here? What was your thinking around some of those things?
Sure. So a small correction. So Union Square is actually a fairly small fund, but they're very, very selective, and they've invested in some pretty awesome companies that we all use. Which is an important point, actually, because there's certainly capital available in Canada, but very little of it is specifically dedicated to venture capital. Most of it is in traditional industries like mining and otherwise. So generally, tech companies almost universally, I would say, have to go down south to the U.S. in order to raise capital. And with every round of financing that we've done, and this was our 3rd venture round, the way that process begins is through a relationship. So you connect with a venture capital fund or one of the partners at the fund, typically at either an event or through another founder. I would say that's the number one way to do it, is find another founder that's raised capital and have them introduce you to their investors. And then you build a relationship, or sometimes a period of years. So we actually met Union Square about 2 years after Top Hat had started. So this is going back almost 6 years ago now. And over those years, the vision of the company became reality. The company developed, the revenues grew. We told them in those early days that what the vision looked like and what the company would ultimately become. And it was only now that we had finally sort of fully realized that the vision, and so around the financing makes sense. So in terms of advice, I would say, for those of you that are looking to scale and get capital, as I said, one, definitely look south of the border. That's where the most experienced, generally the best tech investors are. And it's always helpful to bring capital into Canada. Get founders to introduce you to their investors, because that's by far the best way to do it. That email inbox that everybody's got listed, to submit your business plan, that's like a Venus flytrap. If you submit your business plan into that, you're almost guaranteed not to get funded by that investor. You have to go through an introduction and build a relationship over time. So explain to these investors what your targets are, how you plan to grow, and then deliver. And then once you do that, the fundraising becomes really easy to do, I'd say.
Great. Ali, let's talk to you a little bit about the fundraising kind of side of things. You've grown incredibly fast over the last year or two. You're now well over 100 employees. You've done that off of revenue that you've been able to generate over the last little while. And so talk to me about what's that inflection point for you, where you're now thinking, do I need to raise capital? How much? Where? When?
Yeah, I think whenever in my last company, in this company, whenever I listen to advice about raising capital, you hear these really strong characters give you these really macho answers about how you should raise capital and how you should be in a position of strength and only do it when the investors come to you. But the challenge is that you're not always in that situation, right? You're not always in the position of strength when you need capital, and you can't always force the path in that way. Sometimes the nature of the ups and downs in our industries require us to be sometimes in a position of strength and sometimes kind of asking for capital when we're not in a good spot. With Tulip, for example, the company's only been around for 4 years now. We've literally had 4 times when we fully ran out of money, completely could not pay payroll already, right? It's my CFO is just used to this now. It's just it's part of his daily job. And so I think, look, the ideal answer to when you should raise capital is you should be making so much money that you don't need to raise capital so that investors have to come to you. You should have so much traction that people beg to be, there's an auction of people that are lining up. That's not always possible. Sometimes you can make the myth of that being true. But I think we're always trying to play this game. All entrepreneurship is constantly a game of this catch-22, right? You could be much bigger if you had more power and capital and resources, but you could get much better power and capital resources if you were much bigger. And you're kind of trying to play that game of pretending you're one so you can get the other. And that's kind of what I've been doing my whole career for the last 8 years, is basically when I needed to, show the company's in more strength than it needs to so that I could raise capital. And sometimes we were in just the right spot at the right time and someone approached us, and that's when things really line up, but you can't always make that happen.
Right, interesting. And Carol, what about you? I mean, you're in the enterprise sales, you get caught in the enterprise sales cycle, you're selling to the Walmarts of the world, the really large retail companies. That sometimes takes time before you can close that, before you get that check in that helps you kind of continue with growth. How do you think about fundraising and certainly kind of the Canadian-US interplay?
Well, everything, the guy said, I agree with 100%. Axonify would not actually have gotten off the ground if I hadn't convinced an early investor in California that I knew. So, to Mike's comment about relationships, that pre-existing relationship was critical to our seed capital that allowed us to rebuild the technology, that piece of source code I bought, to get the first few customers. And so had I had to have gone out and with the idea convinced a net new investor that I didn't know that this was something worthwhile, it would have been much more difficult. So relationships are absolutely critical.
Right. And Carol, just to pick up on that a little bit, when you think about kind of raising that capital and raising that next round of capital, what area within your company, within your organization, does that feed? What is it that you're really trying to raise the large later stage capital rounds to do what at your stage?
So at our stage today, so we raised, our last round of capital was last November from JMI in Baltimore. It was 27 million US. And the sole purpose of that was sales and marketing. So scale. We figured out the technology, we know who we want to sell to, and so we know how to service, deliver. It was really about customer acquisition and delivering in rapid, accelerated form lots of net new revenue. So it's really all about that.
Right. That's actually a great kind of segue over to the talent conversation, because I think a lot of the capital pools that are trying to be raised are really just trying to build a team they can keep up with the growth, especially in this particular case with your companies. Mike, why don't you talk a little bit about kind of the talent opportunity in Ontario, the talent challenge? What areas, what talent pools do we have in our own backyard that are incredibly strong? What areas do you feel like we struggle with a little bit, and how are you thinking about tackling some of those challenges?
Sure. I would say first I'll make a point that it's pretty incredible how much the talent landscape has changed in the last, let's say, even 5 years. I would say in the tech world, whether it's engineering, sales, salaries have roughly doubled for top talent versus what they were before. I mean, you used to be able to get an engineer out of school, for 50, 60K. Now that's, that would be a miracle. These days you have to pay pretty much double that. That's actually a good thing. Although one can argue maybe that makes it a little bit more challenging to start new companies. What it's really done is allowed Canada to retain a lot of the talent that was previously being lost, and so the caliber of talent has also increased proportionately. In terms of the talent that's accessible, I'll say that what we found is that individual contributors, so basically individual engineers, individual salespeople, account various individual roles, are fairly, I wouldn't say easy to come by, but there's enough of that out there in Canada. Most companies are able to get what they need. The biggest shortage of talent in Canada right now is senior executive talent. Basically, folks that have been there and done that before. People that have scaled a sales organization from 1 million to 100 million. People that have grown an engineering team from 5 people to 100 people, and so on. That's the biggest gap in Canada, to the point that there's almost, if you look at, let's call it sales leaders, just for the sake of example, people that have grown a business from 1 to 100 million, there's probably a dozen people in the entire country that actually know how to do that, somewhere in that order of magnitude, which is a huge challenge for Canada. And I think, especially given the government environment in the U.S., there's an opportunity to bring a lot of that senior talent back from the U.S. Folks that went to the U.S. from Canada. I like to say that there's more successful startup companies started in the U.S. by Canadians than there are in Canada, because so much talent has left the country, and we have an opportunity to bring that senior talent back to make them successful. So
interesting. And Carol, I see you nodding a little bit. Like, has your experience been the same? Have you? Now, the interesting thing about your background is you've built multiple businesses as a CEO of different companies and seen some successful exits. So you've seen the landscape over the last couple of decade or more. What's been your observation there, and what's worked and what hasn't?
So I completely agree, again, with what Mike said. So I took the approach, because this is my 4th company, tech company, I took the approach of immediately going back to all the people that had worked with me before that were senior and successful. So I knew the level of effort and the quality of their work. And my very first 2 hires at Axonify were a VP of marketing and a VP of development. So very senior people for a company that literally had 4 people. So I always say, go for the most expensive senior people you can afford as early as possible. They will actually help accelerate your business. But I can only do that for so long. So my VP of HR, again, somebody I worked with, et cetera, until you get to a point where you exhaust your network of senior people. And we have just come through an exercise using a recruiting firm, trying to find a senior executive vice president of sales who has sold SaaS in the cloud to the enterprise, who has scaled a company from 15 million to 100 million. And 6 months, and we have found this many people in Canada. And so we are now turning our attention to cities in the US that can be a 1-hour flight from Toronto. So I actually hired a COO last September, and he's based in Boston and flies up every week. So it's a challenge to find those been there, done that people, especially in certain disciplines like sales.
Right. And so, JMI comes in and makes a large investment. I mean, a part of the type of capital you want to bring on is not only the dollar size and check that they write, but expertise and networks and relationships. And so how helpful have some of those strategic partners or capital partners been in helping you attract the talent or get the right talent injected into your company, and certainly their networks in the US?
So they have been helping actually with the VP search and through some of their other portfolio companies and connections there as well. I just think honestly, after the 6-month exercise, there isn't anybody here that we have been able to find that is looking for a role. So as we turn our attention to the US, JMI is going to be very helpful looking in the US market now for those folks.
Got it. Ali, I want to talk to you, feel free to chime in on this particular piece, but I want to talk to you a little bit about hyper growth. And so you've experienced over the last 2 years, what it really means to be able to, to feel like you're drowning every day. I mean, the amount of clients you've brought on in such a short period of time, hiring over 100 people in that period of time, and kind of doing that all in real time. How do you operationalize a team when it's growing that quickly? How do you kind of get them all aligned around your vision? How do you get them all working, kind of marching in the same direction?
Yeah, so last year you witnessed a bit of this because I was in your office in the beginning of this. We started last year with about 17 people, and then we ended the year with about 120 people. And so we added a lot of people, right? And just imagine the training for that, right? The original 15 people, each of them had to train 9 people in that year while also doing their job. And 90% of the company hadn't been there for a year when we're signing new deals and putting them in front of customers. And every investor and advisor told us they've found in the past that you can maybe double your company, maybe triple your company, but anything beyond that causes pain. And we were just like a little bit arrogant about it. We're like, we can figure this out. We have all these customer contracts. We have to hire. We're gonna solve this problem. We're not gonna slow the company down. And what we found was that in software development, where I'm from, we could handle that. Because I knew the culture of software development, I knew how to scale it, I know how to speak to a software developer in a stressful situation and keep them calm because that's the world I come from. It was everywhere else where there was so much havoc because there wasn't leadership. I didn't know how to run a sales organization, but at the same time we're hiring more salespeople than we could handle. People were being brought on, but we didn't have time to do training sessions, so they didn't all know the vision of the company. Some of them wouldn't have a computer for a couple days because we didn't buy enough, and all those silly things that happen. And it was stressful. We were having constant meetings with the company where we tried to do town halls, just venting and talking about how stressful it was to add so many people, but why it made sense and why we were making the decisions we could. If we had to do it again, we would have done the same thing, right? I think that just the challenge, to echo what they were saying, was it was tough without a lot of senior leadership, right? We had 15 people, we couldn't have 5 VPs at that time, but we needed 5 VPs at the end of it, and we couldn't hire them in the time that we grew so quickly. And so you start feeling pain and these holes in the company when you start stretching everything. I don't know if there's a good way around this. I think it's part of startup, it's just handling this stress. But I think the most important thing you can do is really invest in those really early people that can take on growth and be leaders. And finding those people is tough, but it's the most important thing you can do, right?
Right. I want to maybe move over to the customers and revenue piece because we've got an incredible group on the stage now that's figured out how to get customers and have done that incredibly well, and that's what's really driven your growth. And some are from the enterprise sales, some is from kind of education and how that sales cycle works. Talk about what it means to grow a company in Ontario, and what do you need to be thinking global immediately? What are some strategies that you've thought through that have worked really well in getting into the U.S.? Are there things that you thought would work at the beginning and then you realized afterwards that was just a complete disaster? We have to rethink this whole thing. Carol, why don't we start with you on this one?
Oh, you're giving me memories. So interestingly, the first year that we were in business, I pitched in a competition in Aspen, Colorado called Fortune Brainstorm Tech. And it was like American Idol, where there were 5 companies and 3 VCs. And anyway, we won the competition. And that resulted in a full-page spread in Fortune magazine and global circulation. We got phone calls in the month after the magazine was published from all corners of the world, and immediately thought, oh my God, we're going to get all these major corporations. and it all of a sudden became a nightmare, because we were dealing with organizations in every time zone on the planet in multiple languages, and we realized half of those companies weren't even companies we would want to deal with. They didn't make good customers from the point of view of an ideal profile. So we stumbled through the rest of that year trying to figure out whether international was anything we actually wanted to do. And then sort of retrenched back to North America, where we had the same language and time zone and all that sort of thing. So now we have since gone back out internationally and have done that. US, we can deal with directly, fairly easily. The rest of the world, we've been quite successful using business partners. So these are other organizations that sell something to the same sorts of customers that we want to acquire, and can easily be trained up to be a sales arm for us. So that's worked quite successfully for us over the last 3 years now. But trying to do it ourselves that first year was not the best decision ever.
Mike, how about you?
So we'll talk about international, but first I'll tell my ridiculous story about international expansion that was too early. About 2 years into the business, this would have been right around the time when we raised our Series A, we decided that it was a really great idea for us to go to Australia. There's various reasons why we thought that was a good idea. None of them made any sense, but let's just take it as an assumption that we thought we wanted to do that. So what we did was we took 7 sales reps and a director of sales that we had just hired, and we shipped them over to Australia to live in the same house together and work together in the same location and try to sell into the Australian market. We did zero market validation. We just thought, well, it's Australia, whatever. They speak English, right? The sales model is going to work the same way. Within about 6 months, we realized that we had sold $0. The whole strategy, the whole go-to-market that we used in North America totally didn't work in Australia. But we still had a bunch of these people sitting in Australia, desperately, working really hard trying to make this thing work. So after about, it was right around that 6-month mark, we pulled everybody back, and that's how we got our current VP of Enterprise Sales, who's still with Top Hat and is doing really well. So at least something good came out of it. The other sales reps were gone. They were very jaded by the experience, understandably, although they have some fun stories to tell about Australia. So that's how not to do it. Make sure you actually research. That was mostly because we were stupid, honestly. We had no idea what we were doing. But yeah, you should probably research the market, close a few sales in whatever locality you're looking to expand to. But broadly speaking, I would say expanding internationally is not a good idea until you've figured out your local markets. In fact, for the first little while, if at all possible, while you're working on product market fit, I would say your customers should be very close to you. I mean, for us, our successful customers were all in Ontario for that those first couple of years, because you can talk to them, you can drive over to their offices, have them yell at you so you can apologize and fix whatever is wrong. And then only then, once you figure that out, should you start considering to expand internationally. And the right approach is to go slowly, one country at a time, no localization, don't try to convert it into a new language, prove it out, and then only then kind of scale up from there. Or use a channel partnership strategy is a good approach. So that's ultimately my advice with international is go slowly, one market at a time, after you've fully figured things out in North America.
Yeah. Ali, I want to hear your experience on this as well, but I want to kind of give some context because I think it's important to understand that Ali raised his last round and had some large Chinese family offices come into it. In fact, one of the wealthiest families in Hong Kong that created their wealth in retail only invest in strategic opportunities, and they kind of looked to Canada, and this came on their radar, and they made this investment. And so, talk to me a little bit about kind of what that meant for you. Was that kind of strategically done because you wanted to get into an Asian marketplace? Talk a little bit about how you've done the international growth.
Sure. So we raised money, I think, early last year or mid last year. And one of the bigger investors was Fung Capital. It's actually a Silicon Valley-based fund, but their money comes from Hong Kong. It is the largest clothing manufacturer in the world behind it. And along with that was Jump Capital, which is also a private office of these really wealthy folks in the US. Part of the reason why we chose those two funds was that they're not traditional VCs, so they don't have a time limit on their investment. That was one of the bad experiences I had with my previous company was I didn't realize that every fund has a lifetime, and that when that lifetime is up, they call you and say, we would like our money back now. And I was like, I didn't read that. Oh, there it is. And so part of the reason we raise from family offices is that they don't have to get their money back at any specific point in time because they can invest for their whole life, right? And so we raised money from Fung. A big reason for that was it was international, right? So they brought us to Hong Kong right away. They put us in front of a lot of Chinese customers that we're still haven't fully deployed into, but we have kind of lined up. But also mainly because they knew our industry. And so when you're early, it's really hard to explain to people how important your business is in a space that's new to them. So we would show Tulip to a lot of to a lot of investors, and they would say, wait, isn't shopping dead? Isn't e-commerce going to replace all stores? And we were just like, oh God, this is not going to work at all. These people don't believe in the fundamental industry which we sell into. Fung was different, right? Fung is bet their entire, they've generations of lives around selling into stores, so they knew what was happening inside retail really well. So when we went in, we didn't have to pitch our company. They were like, we already know what you're doing. We've been waiting for a company in this space, and it was that easy, right?
Interesting. Wow, very cool. We've got about 10 minutes on this panel, and I wanted to actually flip it out to the audience, which has grown since we started this panel, which I think is telling about the content here. So I think we have some mic runners on the floor, and so if you want to ask any of the panelists some questions, maybe some experiences you're having building a business, or things you want to dive a little bit deeper into, please put your hands up, and we can get to you guys shortly. Yeah, I think we've got 2 questions, but we'll start maybe on the front row, and then we'll take it to the fellow right behind him.
Testing. As a coordinator of a postgrad entrepreneurship program, one of the key things we do is pitching to investors and that. From an investor side of thing, what do you think is key that must be delivered during a pitch? During the pitch where you've got your 5-10 minutes and I'm pitching my new startup to you, what do you think are the key components that need to be included in that pitch?
So,
You go ahead.
it certainly depends on the stage. So I assume that you mean very early stage. They're just starting out.
Very early stage.
In those contexts, the pitch is really just a way to get a meeting. So I would say the purpose of the pitch is to get someone intrigued enough that they're willing to meet with the entrepreneurs and talk more to them. Because ultimately, in that stage, you're not investing in a company; you're investing in a couple of people that are hopefully smart enough to build a real business. Ideally, clarity around presenting a market need, so that's the number one, what problem is actually being solved, that there's some proposed solution that the entrepreneur has, some sort of product ideally that's built, and then finally some basic traction. All of this is pretty standard advice. There's a great book called The Art of the Start that I remember I used back in the day to figure out how to put together an initial pitch deck. So that would be my advice.
So I can say I actually had somebody pitch me first thing this morning, and the piece of feedback that I gave her was that while she is solving a problem, the problem is not big enough or compelling enough for anybody to actually care about investing in. And so one thing I find as a deficiency, because I get pitched a lot, is the lack of quantification of the size of the problem and having it feel painful enough that you instantly get it as an investor that, that's a real problem and it's huge, and this is the person that I think is going to solve that problem. So lack of definition and quantification of the problem is something I find often lacking.
Very cool. I think we had a question right behind, and then we've got one over here.
Hello. All right, here we are. This is a question for Mike. I run a ed startup, littlerobotfriends.com. Everybody. I'd love.
Oh, it's cutting out.
I'd love to hear more about how you entered. Into the education
So the question was, how do we enter into the education market from the bottom up? So I'll say this to start, and this is the number one advice I give to people starting edtech companies. Don't start an edtech company. It's a really, really, really hard market. There's honestly, you might as well start a company trying to sell to government. It's a really tricky market. So make sure you're either crazy or passionate about it, or you have some other compelling reason to go into education technology, because there's a whole graveyard of companies that have tried it. I'll talk about our approach. So one of the reasons that edtech is very challenging is that you typically have to do enterprise sales from the top down. So you have to go to a university, convince them to adopt something, which takes 3 years, legitimately. And then the deal sizes are small, so it's very difficult to get any kind of revenue out of the school, and it takes a very long time to do it. If you're in the K-12 space, so the primary and secondary education, it's even worse. You have to sell to districts and school boards, 3 to 5 year sales cycles, even more budget shortages, with decisions mostly made for really political reasons, not really for merit of the product or the solution. So those are all really difficult. Those are the reasons that it's so hard to succeed in the education technology space. The way we did it is we sort of hacked the market, and we said, you know what, we're going to sell a software product the way the textbooks are traditionally sold. In other words, we sold a piece of software by going directly to professors and students, and had professors adopt them in their classes with no cost to the teacher or the university, with the students paying a small subscription fee to access the content and activities. That was a hack that we developed out of necessity, because otherwise it was, we wouldn't have been able to exist as a business. And we were fortunate that we were able to figure out that model, and that it worked. So that's how we did it. But my advice is make really sure that you want to go into this market.
He's just trying to get rid of the competition. I think we got a question right up here in the front. Yeah, there's one coming right here.
I'm John O'Mara from Algonquin College. Got a question for Mike. And that is, after you had your little Australian adventure, did you make another attempt at the international market?
We totally did. Yeah, we actually just opened up an Australia office. This time we sent an experienced executive to Australia, and then hired a team and figured out the business model before we scaled out. It still remains to be seen whether it will be successful, but we did, yeah.
Do we have any more questions?
Hi, my name is Nassim. I am a CEO of Canadian Society for Innovation and Entrepreneurship. I think that there is one gap for the entrepreneur before go to the pitch in front of the investor, that social capital. and some of them they have a very good. I talked with lots of the entrepreneur, and some of them they have a very good theoretical or have a good product. Their problem how they build when they are going to connect with the investor as a pitch in front of the investor, they can't connect themselves with the investor in communication skill. Do you think that social capital, we should improve the social capital in the Canada as well, or what's your idea?
I'm not sure I heard exactly the question. Social capital as in social entrepreneurship?
Social capital, some kind of the skills that communication skills and the networking skills that they start in the US and Harvard University and Harvard Innovation Lab, and I think that still there is a gap. Do you think that entrepreneur it's good to first improve their social capital, networking, and then go for the venture capital?
I think just a
Yeah, so generally speaking, so I will say when I do angel investing myself, and I believe this is true of me, pitching others like VCs for capital, how the entrepreneur comes across is 80% of my decision. So if they are not articulate, if the term I use is that guy or that gal is on the stick. They get it. And if that doesn't come across to me very quickly and in a sort of a compelling way, so articulate, smart, can answer questions quickly, all of those things that go to how they comport themselves, I typically don't invest. So I would say your social abilities, your social skills are extremely critical to creating an impression that you are on the stick.
And if you can't do that, I think you have to surround yourself with people that can do that on your behalf, right? I think there's examples of great Canadian and US CEOs that, or founders of companies that found a business partner that could communicate better than they did. They did all the investor relationships and all that, like the networking piece of the business, while the other folks focused on the internal aspects and the R&D. But I think you're right. I think that it's important, and we forget how important it is to have social capital.
There's a question back here. Yeah.
Hello. Okay, so I just had a quick question regarding whether you should pick to scale up or whether you should opt for like an exit strategy if you're not sure on how to scale up, or if you're like a young student entrepreneur. So what kind of strategy would you prefer, and why you would pick either one?
I think there's no real answer, right? It's what do you want to do, right? Do you want to build a great company that's sustainable, that you can be in forever? And that could be a great thing for your family and for yourself, and that could be the best thing you could do. There's other people who say, you know what, I'd rather I bet it all, risk it all, but I want to build literally the biggest company that's ever existed in the history of time. And that's both a stupid idea and a great idea at the same time, right? I think when it comes time to decide between exiting and growing, the usual advice that I hear is, if something's going to make a life-changing, like if it's going to be a life-changing amount of money that would literally alter your life and the life of like generations after you, you should take that opportunity, because that's a once-in-a-lifetime thing. And you want to be in a position where you can take those risks without having to bet everything you have, right? And so part of the game is basically being really smart about these really high-risk decisions without being silly about it, right?
I think it's a very personal thing, to be honest with you. I think it's very circumstantial. And, as Ali said, it goes to your personal thing. I've sold 3 previous tech companies to US acquirers. And I will say I've had a lot of flack for that. You're selling your company, selling out. Well, talk to me about the check in my pocket and the checks I gave to my investors and all of my employees. It was a very good thing. And a lot of them have gone on to invest in other startups. And so, that for me is what I do. And each situation is its own thing. And I don't plan it. I always plan to build a great company. That's my plan. And when you do that, you naturally attract other opportunities, and then you can decide at the time.
Yeah. So we've got less than a minute here, so I just want to maybe fire down the line here. while all of you guys have started these companies here in Ontario, you've also chosen to scale these companies here. Just really quickly talk about why you want to scale in Ontario versus anywhere else in the world. Certainly you guys all have the option to pick up and move somewhere else. Mike, why don't we kick off with you?
It's capital efficient is one thing. With all, if your revenue happens to be in US dollars and all your costs are in Canadian dollars, that puts you at an advantage. There's a lot of access to talent in Canada, where the competition is not nearly as fierce as it is in the Bay Area, and it's an up-and-coming ecosystem, and there's a way to benefit that. And there's sort of the benevolent, altruistic kind of goal of building the community in Canada.
Carol?
Everything he said. Yeah, it's a great place to live and work. And if you look for it, everything is here for you. You can acquire what you need to build a great company here. You don't have to go elsewhere.
And for me, I think that we forget that great tech companies are based on people. It's not about tech. It's about like a great base of technologists. We're actual people that come to work every day. And to succeed as a startup, you don't just need great minds. You need a combination of great heart and minds. And Canada is the best place to find the combination of those two people and those two attributes in people.